Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap. And look ahead. It is Tuesday, and it is December, and we're after Thanksgiving and before Christmas, and it's starting to get a little chilly out. But market's still moving along, so we have to move along with it, right? On Friday we were thinking about a pull-in, and the S&P cash went from 22.14 down to about 21.88. Sent that little tweet to Redler, relax us. Let's get along a little spiders, little small caps with the IWM, little oil. Actually, we're long oil from the OPEC meeting. And let's get along a little EWG, meaning let's get some European exposure, just in case, the same trend follows suit when, Italy votes whichever which way, and they buy Europe and play some catch up, and then we could slap hands and, keep making some P&L. And then obviously we do a lot of trades, within all of this stuff. But, the way you make money is looking for these type of setups and looking around versus just complaining and looking for a top and bashing Washington and, hanging out on Facebook. But anyway, let's go to the chart of the S&P cash. Here we go. I love showing this. Why do I love showing this? Because this, which was your pre-election sell-off, looked exactly like this. Post-Brexit sell-off. But then what happened? Boom, rally back, commitment to it, took out the descending trend line and 90 handles. So if you missed this and evaluated that, you caught that. So that's why we tried to focus here. When we got out of the way, came up, everyone said the world and the market was going to collapse post-Trump if he won. Well, this was your gap down, broke above the descending trend line, which the charts don't lie, held above it. This was when we started accumulating some good longs, and then the target was through prior highs, which usually happens in a strong tape, and that was right here. And then what a quinky dink. Let me draw this again. We came back, retested this spot. This was Friday, and now we're right back at highs. So the question is, will this make new highs tomorrow? It might. Doesn't have to, but all in all, I would not be just having short on the brain like a lot of people out there do. Okay, Russell, IWM, King Russell, boom, new highs today. I unfortunately sold a little bit early, but you know what? I was happy to be involved. Bought a little bit of the Russell, tweeted it out to Redler All Access Friday saying I'm going to be long the IWM. Stayed long yesterday, sold some today. Probably opens up a little bit tomorrow. And if it doesn't, maybe we see if it holds above this prior high right here. But all in all, lots of nice trades. This is when this took out the descending trend line. This is when it made highs. This is when it traded below a low. A little bit of a retracement, and then pow. Lots of things to do here. XLE, what are you doing? XLE is just kind of hanging in there, creating a nice little bull flag above the 8-day moving average, and it looks as if at some point it's going to take out these highs. I bought a little USO this morning on the cheap, and I sold some a little bit later, and I'm still involved in oil itself is just kind of hanging out here. I posted a chart of XOM. Why did I post a chart of XOM? Because I think it looks tight. I like tight charts. Tight coiling charts could give you a nice breakout move. Doesn't mean it has to. So I'm in some XOM, and I do think at some point, maybe after the 430 number today, or if the if it's a bearish number and it doesn't go down, it goes up, maybe you buy some versus spot, so you're in it, watching it, not just talking about it, not just debating it, and then if it gets above 88 with some volume, you add to it, okay? While I'm talking about charts that I posted Disney, same kind of thing. This took out this little downtrend here, started going sideways. Said today, why don't we maybe buy verse here, and then if it takes this out, buy a little bit more, and it's holding in well and on its way up. I think it's going to fill this gap at some point, but again, 2 days up, usually sell on day 3 if it's up. There's something to do. I'm trying to figure out other trades to do because high beta tech is not what it used to be. Yes, you can catch day and a half trades, and we did that, right? We did that in Amazon. Yesterday, I started buying Amazon. I held it all day, up $3-4 today, sold it up $4 and said, nice cash flow trade. Still, kind of hung in there. Amazon, if you look at the chart, not a barn burner. They're hiring all these robots to check out your food, and hopefully it doesn't take over the world. But anyway, this was your buy 2 days ago and continued a little bit into the 21-day. Kind of get back up to here, maybe, but I just liked that day and a half trade, so I took it. Did the same thing back here, took it a little early, and look how high it went. So I wouldn't just short Amazon because it had 2 days up, but you have to be a little careful as it could falter because tech is kind of weak. Google gave you a day and a half trade also. What do I mean by a day and a half trade? It means took out a prior high here, opened up, and then sold down. So there's your day and a half trade into the 21 day. That's how to make some cash flow. Doesn't have to make new highs. Doesn't have to mess with you the way it messed with me for so long. Remember this trade? It was so hard. I bought it here, got hurt there. Bought it here. I don't even remember what happened here. All I know is I stopped trading it from a momentum side when it came out with the earnings and failed right there. It should have broke out to new highs. It didn't and failed. So now I'm just taking it day in, day out. That's why yesterday I was in Facebook and I was like, let me see if there's a little bit of follow through. If there's not, just washing my hands of it because it's hard to be trusted. And Facebook, the same thing. Not a great looking trade. A little double bottom, maybe. Lots of moving averages above it. So got to take your trade when it comes. 2 days ago, traded above this, and today was a choppy mess. So whatever. What wasn't a choppy mess was Netflix. Netflix took off on Friday. Remember this trade? Boom, everyone said it's getting taken over. Didn't get taken over, so it was a little bit down on Monday, and then pow. Lots of people out on Twitter land was saying there was an event today talking about the bearish case of Netflix. So those of you who tried to short it ahead of it thinking you were going to be cute, you just got your tushy squeezed off. If you were trading it technically and didn't even know about that, which would have been better because I would have traded. I didn't because I heard that there was going to be this big presentation on why not to be in Netflix. But anyway, that was an opinion, and this took this out, and that closed strong. And if you bought it here and sold it on the close, no matter what happens in 2007, they can't take it away from you. It was a good trade, and this is getting close back to highs. Above the 21 day, above the 50 day, above the 200 day, better than most looking high beta tech names. This morning we made a little bit of money in Apple, but not special. You had to buy the whole 30 minutes, and then it kind of faltered when I think there was some news that they're settling with Samsung and giving money back. I don't even remember what happened, but either way, this could be something to watch for tomorrow. It's got a 3-day tight range. Maybe it breaks above it. Wasn't very juicy today. Let me show you what we did in the first 5 minutes, how we created cash flow. You had to really have conviction there. I don't know why I had conviction this morning. Maybe because Tim Cook talked about the watch. So opened up, came in, bought a lot of it, took out this 5-minute high, bought more, sold some into that, and then I just kind of got away from it when it didn't act well around this $10. Got out of it, and it came back up. So whatever. We'll see what happens tomorrow. If you're still in it, there's a small chance you get some more follow through. New issue land. I wouldn't be so excited. Some guys made me get long Twilio at the close just to be social. Why did I even do it? I don't know, except for you have a small double bottom here. It perked up. Maybe you get a move to the 21 day. Not expecting much. ACIA, not much you could say here. Broken name. It also had a little bit of a double bottom, perked up, but again, not a barn-burning trade. The banks. Yesterday I was talking to my friends at Schoenfeld, and they're like, we're going long Deutsche Bank. I'm like, I haven't seen what Deutsche Bank's doing in a while. Let me take a look. Meanwhile, Deutsche Bank, look at that move. Wow. Okay. What could you have seen? You could have seen that yesterday it closed very strong, okay, and closed above the 200 day, and there's your follow-through. And if you look at Deutsche Bank's been obviously annihilated, and now is playing some catch-up. Shorts are scared. It's not going out of business like everyone talked about before the election. Maybe it gets up to here. Other banks that we trade here, Goldman Sachs, tell you not to be too cute. Why don't you want to be too cute? Because it can make you look real ugly, and those guys who are always looking for a short are getting crushed. This was your initial move. This was your bull flag, and here's your continuation. And look how nice that looks. Now it's extending, hard to buy, but what I say is when it's hard to buy, what does it mean? Doesn't mean it's a short. Okay, and it did go negative for 5 minutes this morning. Doesn't mean you have to short it and then get squeezed later. JP Morgan, what is it doing? Probably the same thing. Oh, what did Quinky think? Went negative, went back to high, squeezed anybody who stayed there longer. Might as well stick with the real trend, not the cute trend. But anyway, here is your flag. There's your continuation. It's like a textbook right here. You go to Technical Analysis 101. Here's your pole. Here's your flag. There's your continuation. At some point it might end. It's a little extended now from the 8th day, so don't chase. What else? Let's see what gold looks like for all of you trying to catch a bounce. Still no real bounce here. Little red dog reversal yesterday. Still no traction. Maybe there's a little bit more tomorrow. We'll see. GDX didn't make a new low at gold. Maybe that means something, or maybe it means nothing, except for it's tired from going down. Today, tried to go a little bit. Here's the pen. Give me that pen back. And, little push through, back down. It's just not compelling to me. This is more of a short than a long, even though it's oversold. Boom, look at that failure right there, and then look at that failure right there. Now it's got a lower level trade. This looks the opposite, right? Pole, flag, some point, seems like it could be lower. But again, I don't like going for the extra sauce to the downside because it could be a slippery slope. And that's about it. We've been moving and grooving. I'm like a poet and you didn't know it. Oh, wow, another one. Anyway, a little delirious today. I had to take a lot of continuing education type of stuff because I'm a 24, I'm a 7, and I have to do all this stuff before the end of the year besides trade, besides do content, besides write my 2017 thesis, besides be up all night watching the Jet game that was horrendous because my son was in a fantasy league and I had to see if Brandon Marshall got a few extra points, and he did. He won by 0.6 points. And anyway, we'll see what happens tomorrow. Tomorrow's Wednesday. Keep taking trades. Keep, your stops. Play to your process. Don't just look for a top. Look for those setups. And maybe you'll put together a nice December and then start, 2017 on the right note, which we'll do together. See you in the morning at the call. Have a good one.